Good afternoon, ladies and gentlemen. Thank you for coming to this. We had to bring this forward, and we are happy to see you all here. The meetings of the Monetary Policy Committee have been at an end since this week's deliberations, and the chairman of the Monetary Policy Committee and Governor, Dr. Ernest Addison, is ready with his address. So the same rules apply. Let's keep to relevant questions. Let's keep it short. Introduce yourselves, and let's make use of the time spent together this afternoon. So, Mr. Chairman and Governor, we are ready.
Okay, thank you very much, AC. Good afternoon and welcome to the 89th Monetary Policy Committee press briefing. The MPC met during the week to deliberate on recent global and domestic economic developments. We present highlights of the discussions and subsequent positioning of the monetary policy rate. Since the May 2019 MPC meeting, global growth momentum has continued to decline, reflecting heightened policy uncertainty on a number of issues, including escalated trade tensions between the US and China, unresolved Brexit negotiations, and geopolitical tensions. In emerging market and developing economies, growth broadly weakened, influenced largely by the slowdown in global trade and concerns on the back of the ongoing US-China trade tensions. Inflationary pressures in advanced economies, including Ghana's key trading partners, remained relatively subdued as a result of low energy prices and sluggish wage growth, despite the tightening of labor markets. Across emerging market and developing economies, the recent drop in oil prices have contributed to subdued inflation pressures. In the outlook, inflation is forecast to remain stable in advanced economies due to the expected moderation in global growth, relatively anchored inflation expectations, and moderate wage growth. The expected drop in oil prices and dovish shift in central bank forward guidance in most advanced economies are expected to keep interest rates low and support growth over the medium term. Global financing conditions, on the other hand, have eased somewhat due to the prospects of anticipated cuts in the US Fed rate in the second half of the year and the general accommodative monetary policy stance across most advanced economies. Accordingly, global interest rates are likely to remain broadly unchanged and in some cases decline and support a reverse flow of capital to emerging markets and frontier economies with strong fundamentals, and also limit the risk of sudden portfolio reversals from emerging market and developing economies. The momentum in domestic economic activity continued to pick up, evidenced by the latest growth estimates released by the Ghana Statistical Service. The first quarter GDP annual growth was estimated at 6.7% compared with 5.4% in the same period of last year. Non-oil growth was strong at 6%, up from 4.2% recorded for the corresponding period of 2018. The growth outturn was driven by a strong recovery in the services sector, which grew by 7.2% compared with 1.2% in 2018. The bank's composite index of economic activity also reflected strong uptick in economic activity. The updated CIEA recorded a growth of 3.2% year-on-year in May, compared with a 2.2% growth during the same period last year. Consumer confidence also picked up significantly, reflecting optimism about current and future economic conditions, while business sentiment softened somewhat. Headline inflation has trended downward since April 2019, after 3 consecutive price increases on the back of exchange rate pass-through effects. From 9.5% in April, inflation declined to 9.4% in May, and further to 9.1% in June. Underlying inflation also trended downwards, as the bank's main measure of core inflation, that is, inflation excluding fuel and utility prices, eased in June 2019. The country's 3 main export commodities, oil, gold, and cocoa, traded mixed in June 2019. Crude oil prices rebounded during the first 5 months as production cuts coupled with renewed geopolitical tensions lifted prices. However, prices have since moderated to an average of $63.1 per barrel in June, down from the average of $71 per barrel. On the other hand, gold prices made significant gains as the US-China trade tensions heightened. Gold prices rallied to a 6-year high average of $1,359.7 per fine ounce in June 2019. Prices of cocoa bounced back in June, driven by supply constraints. The recent move by Côte d'Ivoire and Ghana to set a floor price for cocoa also supported the price rally. Cocoa prices averaged $2,467.1 per ton in June. Consequently, export receipts for the first half of the year remained robust at nearly $8 billion, and together with a relatively lower import bill, positively impacted on the trade account. Provisional trade balance for the first half of 2019 recorded a surplus of $1.9 billion, compared to a surplus of $1.3 billion in the first half of 2018. The trade surplus was partly offset by net outflows in the services and income accounts, leading to a marginal current account surplus of $39 million in the first half of 2019, compared to a deficit of $409 million in the same period last year. The current account surplus, though marginal, is the first in recent history. This surplus, together with significant inflows to the capital and financial account, yielded an overall balance of payment surplus of $1.3 billion over the period, compared with a deficit of $372 million last year. Gross international reserves stood at $8.6 billion, equivalent to 4.3 months of import cover at the end of June 2019, up from $7 billion at the end of December 2018. The domestic currency market has remained relatively calm. The CD cumulatively depreciated by 8.2% in the year to July 2019, compared with 5.8% for the corresponding period of 2018. Against the British pound and euro, the Ghana CD cumulatively depreciated by 5.9% and 6.5% respectively, compared with 2.5% and 2.9% depreciation respectively over the same period in 2018. In trade-weighted terms, the real effective exchange rate continued to be broadly aligned with the underlying fundamentals. Provisional data for the first 5 months of 2019 showed an overall budget deficit on cash basis of 3% of GDP against the target of 2.4% of GDP. This excludes some energy-related payments of about 0.7% of GDP. The higher than projected fiscal deficit outturn was primarily driven by lower than expected revenues against an increased pace of spending. The revenue shortfalls were mainly from international trade taxes. Over the review period, total revenue and grants amounted to 18.5 billion, compared to a program target of 21.5 billion, indicating an annual growth of 7.6%. Total expenditures, however, reached 28.6 billion, marginally below the target of 29.7 billion, and representing 25.2% annual growth. In line with the above developments, the stock of public debt rose to 58.1% of GDP at the end of May 2019, compared with 51% of GDP at the end of May 2018. Of the total debt stock, domestic debt was estimated at 94.6 billion Ghana cedis. That is 27.5% of GDP, of which 11 billion Ghana cedis, or 3.2% of GDP, represented bonds issued to support the financial sector cleanup, while external debt was 105.4 billion Ghana cedis, or 30.6% of GDP. The key monetary aggregates broadly reflected some growth in line with continued expansion of economic activity. Annual growth in broad money supply was 22.3% in June 2019, compared with 13% in the same period last year. The growth in total liquidity was supported by increases in both net domestic assets and net foreign assets of the banking system. The pace of growth in reserve money, however, slowed to 8.8% on a year-on-year basis in June 2019, compared with 13.9% growth in the same period a year ago. Private sector credit growth continued to strengthen, supported largely by the well-capitalized banking sector. Annual growth in private sector credit went up by 19.8% in April 2019, compared with 5.6% growth in the same period of 2018. In real terms, private sector credit expanded by 7.1%. Money market interest rates on government securities reflected mixed trends, edging up in short-dated instruments and moderating marginally in some long-dated instruments. Over the first half of the year, the 91-day Treasury bill rate rose to 14.8% in June 2019 from 14.6% in December 2018. Similarly, the rate on the 182-day bill also increased to 15.2% from 15% for the comparative period. On the secondary bond market, yields on government 7-year, 10-year, and 15-year bonds moderated, indicating favorable long-term inflation expectations. The weighted average interbank lending rate, which shows the rate at which commercial banks lend to each other, also declined to 15.2% in June 2019 from 16.1%. Average lending rates of banks, however, edged up marginally to 27.7% from 26.9% over the same comparative period, and in line with increasing rates on short-term instruments. Financial sector reform has continued with the recent revocation of licenses of 347 insolvent microfinance companies and 39 insolvent microcredit companies. The receivership and liquidation of these institutions are in progress, and depositor claims are being validated and paid. The banking sector reforms continue to yield results. Provisional data available through the year to June 2019 shows that the banking sector is well capitalized, solvent, liquid, and profitable, with improved financial soundness indicators. At the end of June 2019, banks' total assets amounted to 112.8 billion Ghana cedis, representing an annual growth of 12.5%. The increase in total assets was funded mainly from deposits, which recorded a growth of 22.3% year-on-year. The industry's capital adequacy ratio was estimated at 19.1%, significantly higher than the statutory minimum of 10%. The average industry capital adequacy ratio was 16.3% when computed in accordance with the new Bank of Ghana Capital Requirement Directive under the Basel II-III Capital Framework. Asset quality has improved significantly in the banking sector on the back of write-offs and loan recoveries. The non-performing loans ratio has declined from 22% in June 2018 to 18.1% in June 2019. Though still high, the recent decline is in the right direction, and banks are still working to intensify their credit risk management practices and loan recovery efforts. In sum, global growth momentum has continued to soften, and it is expected to remain weak into the second half of the year. This, together with the relatively subdued inflation, has prompted most central banks to signal more accommodative monetary policy stance in the near term. Subsequently, it is expected that global financing conditions will remain supportive for both emerging market and frontier economies with strong fundamentals. These developments should help support a stable currency and dampen inflation pressures going forward. However, uncertainty surrounding increasing trade and geopolitical tensions in the global outlook may require some monitoring. On the domestic front, economic activity remains strong and broad-based, although there are some downside risks to growth, mainly from subdued business sentiments and due to increases in utility tariffs. Growth is expected to remain robust in the second half of the year. The medium-term outlook for the real sector is positive, based on improving consumer sentiments and continued recovery in private sector credit growth. The strong external payments position witnessed in the last 24 months continued in the first half of the year. Both the trade and current account recorded surpluses. These, together with improvements in the capital and financial account, translated into a slight build-up in reserves in the first half of the year, supporting the local currency market as the cedi remained relatively stable in the second quarter. The committee, however, observed that the pace of fiscal consolidation has slowed down, mainly reflecting gaps in revenue mobilization, while the pace of spending has increased. This could pose risks to the macroeconomic stability if not addressed. The committee therefore expects some corrective measures will be announced in the mid-year budget review. They should help address the financing gap challenges, as well as manage the risks from the large unbudgeted energy sector-related payments that could adversely impact foreign exchange reserves and undermine the stability gains made so far. The committee, however, noted that while these risks remain, the bank's core mandate of price stability appears to be on track. Inflation has remained within the target band in the last 15 months. The committee assessed that the pass-through from exchange rate to depreciation is waning, and the underlying inflation pressures as well as inflation expectations are well anchored. under the circumstances, the Monetary Policy Committee decided to maintain the policy rate at 16%. Thank you.
It's question time. Yes, please identify yourself and the media houses. Okay, George, come closer.
My name is George Uafe from Joy FM. Doc, quick one on the cedi. If you look at your reserves, we've seen some little pressure on the Ghana cedi. And even if you compare the year-to-date depreciation compared to this period to last year, it's a little bit higher than what we've recorded. Are we seeing some re-emergence of pressure on the cedi again, or just over the last 3 days, the correction is taking place? So maybe we shouldn't be worried, or you want to wait for a while. With respect to the policy rate cut and even maintenance, are we experiencing the pass-through effect on the private sector and for the normal business person? Because still rates are moderately high, and is the market responding enough to what has happened over the past 6 months in terms of the policy rate? And finally, Doc, you talked about the data supporting that confidence in the banking sector has indeed picked up. But year or more than a year after these reforms, what about, in economics code, they'll say the real sector? What about the real people? Do you think that the sector is better off today? And for those who were affected, they are better off today? Recently, a woman who saved some money with one of these savings and loans company, that is an autism school, was complaining that he has to close the school down because she can't retrieve their money. There are still several complaints from people who are complaining that they've been affected by this, Doc. Thank you.
My name is Obed Atayebua from the Business and Financial Times. Okay, so Doc, what transactions accounted for the rise in the public debt stock from 198 billion to 200 billion from April to May? And secondly, there are stories making rounds that the GATT arrangement has failed. How true or untrue is it? And if it's not true, where are we in the process of raising the GATT money?
All right. My name is Parkus Yasari. I work with TV3. Thanks for the opportunity. So you talked about the fiscal deficit target being missed slightly. And you, I know that a deficit often occurs when there is when expenditure exceeds your revenue. You explained that this was not the case for the fiscal deficit target that we missed. It was largely due to the fact that there was a shortage in expected revenue. Often, when such things occur, you'd rather lower your expenditure or increase your income or your revenue. So, how did this really occur? Secondly, financial stocks haven't performed quite well this year, and you would largely attribute that to, the sort of reforms we've seen in the banking industry. We've seen the microfinance as well. We're expecting to see some, reforms happen in the savings and loans as well. How is this largely going to impact on the performance of the stocks?
Good afternoon. My name is Elom. I write for Economic Times newspaper. My first question, I just want to find out from you, our debt stock has risen to 200 billion, like my colleague said. Is it sustainable going forward? My first question. My second question has to do with, you said interest rate is rising and inflation, we all expect inflation to also go up in the subsequent month, due basically because of the rise in utility prices. We were expecting that at least the policy rates could be hiked by 50 basis points to 100 basis points. Can you give further clarification to that effect? My third question has to do with, we were expecting almost like 1.1 billion from donors to support our budget for 2019. I just want to know how much has come in so far. Thank you. Fourth one.
Okay, thank you very much, AC. And Probably let me start with the question from Joy FM on the depreciation of the cedi. If I understood what you were trying to say, the fact that the depreciation of the cedi this year as of the end of June was higher than last year, which is a fact. I mean, we all know that in February we had seen some kind of slippage of the cedi of a very significant proportion. And since February, the cedi has corrected somewhat, but it has not corrected enough to compensate for entirely for that slippage in that month. And therefore, statistically, you would see that as of the 2 half-year periods, it appears as if the cedi has been weaker in 2019 relative to 2018. I think we need to wait and see what would happen for the rest of the year and see what the end year comparisons would look like. But the most important issue for me is the fact that we are looking at the underlying fundamentals in February. We did not think that that movement in the cedi reflected the underlying fundamentals and the fact that we had argued that this was driven mainly by sentiments. So it's important to distinguish the drivers of movements in the exchange rate and not necessarily assume that once you have recorded a higher depreciation rate, the situation necessarily is worse compared to what we had seen in 2018. The next question, which I think you asked, was whether the market is responding to the policy rate cut. And I think to some extent, yes, the market is responding. If you look at the Ghana reference rate, which is really the base rate for all banks in Ghana, just by the statistical relationship with the policy rate, you do see the movements in the Ghana reference rate. I also know for a fact that it appears that lending rates broadly in the non-bank financial institutions segment has trended downwards since, the microfinance cleanup, was sorted out, because the problem with the high lending rates emanated from those small institutions that were bidding, deposit and therefore lending rates up. And by sort of removing the weaker ones in there, we have seen some softening of lending rates in that segment of the market. I believe confidence in the banking sector has significantly improved. I'm not surprised that the example you gave is of a customer of a savings and loans company, and as you know, they are waiting patiently for their part of this rescue effort to be implemented. So hopefully we will get to that very quickly. But broadly, we see that confidence broadly has improved significantly and has real implications. These are people who are needing their financial resources to be able to lead their lives, pay school fees, buy food, do the sort of things that all of us as human beings, have to spend our monies on to keep body and soul together. So these have real life implications. And by, protecting more than 1.5 million of such people, you should be the judge of whether conditions are better or not in that context. Then the question from BNFT on the public debt, April to May. I think somebody also asked about the debt stock. I mean, within a very short period between April to May, if you look at the way the nominal total debt stock is derived, part of it will reflect exchange rate movements during the period. So valuation plays an important role, when you see changes in the nominal debt stock because of the dollar value of our external debt. And maybe this is the point to discuss whether the debt stock is sustainable or not. I mean, our assessment on very high rates of growth, it's also contingent on setting assumptions about interest rates and exchange rates. But we would not, I don't think we should shy away from the view that there are vulnerabilities. This is really what the discussion should be about. If you have quite a bit of external debt stock and you have significant non-resident holdings of your debt, you are vulnerable to movements in exchange rate. So the discussion really should shift away from the question of sustainability to an assessment of how vulnerable are we to shifts in sentiments that can, even impact the exchange rate and by implication, the economy as a whole. Then your next question is on GATT. I think it's very straightforward. I know the government has provided money to GATT to pay up for the capital for the banks that are, classified as GATT banks. As to whether that means anything else, I think that GATT is there to play other roles as well. I mean, GATT is supposed to help transform this bank, look at their governance, help them to relook at their business strategy. So there are other things that GATT was, set up to do other than raising the resources from the capital market. Deficit target increased slightly, whether that being a problem from the revenue side. I'm not quite sure what you're driving at, because yes, we are saying that we saw some underperformance in the revenue relative to the targets, right? And that had been, the major source of the problem on the fiscal side. The issue is the corrective measures in the past has been the compensating, reductions in expenditure in order to stay within the budgetary ceilings. As we said, we are seeing an increasing pace of spending, and therefore you don't see the same amount of compensating reduction in expenditure that occurred, let's say, in 2018 compared to what we are seeing in 2019. And that, in a way, gives you a sense of the qualitative change in the fiscal stance from a more consolidated position to a less consolidated situation in 2019. Then the question of the financial stocks non-performing, I believe that was the assessment in 2018 during the reform exercise. I believe that has changed somewhat. We are beginning to see the banks perform very strongly, and therefore that seems to be impacting on the financial segment on the Ghana Stock Exchange. So this is our sense of the development there. Rise in utility prices, I think that's the other question, and the decision on the policy rate. And you're surprised that despite the increase in the...
Yes, more especially when interest rates in the money market is also...
Yes. But remember that we kept the policy rate unchanged. It's important to also read maybe some of the material that we have put out there, that we had said that inflation remained within our target range, and it has been there, I believe, in this press release for more than, 15 months or so. I think it's important to say that, yes, from our projections, the models that we have in the bank, we do see that we could see some elevated profile in terms of the headline inflation towards the end of the year, but it would not fundamentally shift the inflation rate from our medium-term target. And this is why we had the courage to leave the policy rate where it is. If we had seen any major shift which would threaten our medium-term targets, obviously we would have taken a different decision. The last question is on donor support. I don't think that there is a donor support of that value in the.
In the budget, we are expecting almost like 1.1 billion.
Yeah.
I just wanted to know how much is coming.
You can check with the research people later, but I don't recollect the donor support. Most of it is sovereign bond money.
Okay, good afternoon. My name is Richard Abe from CTFM City TV. I want to find out from you. You talked about vulnerabilities which we need to assess, and one of them you mentioned is the fact that we have a lot of foreigners holding some of our bonds. And was it part of your consideration in choosing to maintain the policy rate, seeing that if you had reduced it, given some conditions, some of these foreigners would want to move out their capital? And then also, on the banking reforms, we know you've talked about the fact that very soon we'll see some actions in the savings and loan sector. There are people who say there are certain companies, savings and loans companies, which are facing liquidity challenges, but they've not gone bad. I mean, they've not collapsed. So they are saying that, is there a possibility where you can save some of them from collapsing? Because as we speak now, they are not insolvent, but they may just be having some liquidity crisis, which may have been impacted by some of the collapse we saw in the banking sector. Is there a possibility like that?
Good afternoon. My name is Maxwell from Graphic. Mr. Governor, just a bit of confirmation on the GATT banks. How much did the government give to them, and under what sort of arrangement? Because GATT, as we were told, was supposed to raise the funds and then invest in them. So is it the case that GATT is taking the money from government as a bond, as a debt? What kind of arrangement? And then on the capital adequacy ratio, I noticed that we started the year very well, above 20%, but now it's around 19%. What role do you think the GATT banks, so to say, played in this trend in the capital adequacy ratio? And then finally, on the issue of foreign investor holdings in our bond market, the Ministry of Finance says that they want to introduce a cap. They are planning of introducing a cap on the amount of holdings that foreign investors can have, and they are looking at either placing a normal cap or matching it to our reserves. From a monetary perspective, what would you advise, looking at the circumstance we find ourselves? Thank you.
Right. Thank you very much. My name is Justice. I write for Shinhua. Just two quick questions. The reforms in the savings and loan sector, can you give us a specific timeline concerning that? Then, directly related to our currency depreciation was this story about ECOWAS agreeing to start implementing the ECO on January 1 next year. You are in there, so we would like to know what decisions have been reached. Professor Kote said ECOWAS is not ready. And so what decisions have been reached so far on that? Thank you.
Thank you.
Governor, I can wait for you to answer them because I think there are quite many. Did I take the last one, if that's okay with you? I'm being very caring. Governor, thank you. How much and in which tenors of the local bonds did you buy back after the Eurobond? And then, two, you said the pace of fiscal consolidation has slowed down, mainly reflecting gaps in revenues and then a threat to stability. The last time we spoke on this, you said you had some comfort. Has the comfort changed? Thank you.
My name is Fred Jakpata. I work with Star FM. In February, Star FM reported that about over 10 staff of the central bank have been referred by the Ethics and Investigation Committee for various roles they played in the collapse of some 7 banks. Please, can you give us an update on what has happened so far after the investigation?
Well, I think this is a wide range of questions on important issues, a question about vulnerability. I'm not sure what you want me to repeat. As I said, I think that the debt, in our view, is sustainable because of the assumptions on growth and interest rates and exchange rates. So when we look at that configuration of Ghana's debt relative to the growth assumptions, we think that it is sustainable. However, we recognize that we are vulnerable because the foreign exchange component of the debt is significant, both the external component of the debt and then non-resident holdings of our debt is also significant. So that's where the vulnerability comes in. So this is really, and yes, in assessing, taking a decision on where to place the policy rate, you have to be, cognizant of some of these flows. This is in response to the question about whether this was a consideration in the decision on where we put the policy rate. Fortunately for us, we are going through a period where the monetary policy stance in the advanced economies is on the accommodating side, and the forward guidance that we have seen is for the Fed funds rate to be cut. So that gives us some policy space to keep our policy interest rates in the emerging markets either where they are or also in line with what is going on with the rest of the world. The incentives in that sense are well preserved as far as emerging markets are concerned. Then the question on the savings and loans. I was hoping not to speak too much on the savings and loans issue, but we are ready. As you know, these things are costly. Somebody has to pay for it. And as we have said in the past, as soon as the resources are put on the table, we would get to work on what we need to do. So we are still trying to mobilize the resources that would be required in order to undertake the cleanup of that sector. And yes, we are always very careful in making decisions on license revocations without a clear data which suggests that the institution is insolvent. The Bank of Ghana does not act. We do not take license revocations on the basis of liquidity shortages. So let's be very clear in our assessments. No institution which is solvent but liquid has had its license revoked. So we would start to look at that sector. It's going to be on the basis of whether these are solvent institutions that can, be effectively run over the medium term. I believe the questions from Max on GATT, maybe you need to talk to the GATT Secretariat to get the details on exactly how much and what arrangements they have with the government. That they are the appropriate people to answer the detailed questions on the GATT. But as to the capital adequacy ratio declining from 20 to 19%, I'm sure you know how it's calculated. Some of these marginal movements would happen from month to month. It does not necessarily mean, some negative developments. On the foreign investor cap over reserves, yes, we were part of the team, together with the ministry, that decided that we need to manage our vulnerability by trying to set a cap on how much of our domestic bonds to allow non-resident investments to hold. And the various indicators that can be used, setting investor holdings relative to our reserves is a good measure, but there are other measures also that we use to assess vulnerability. So let me move on to, yes, I see another question here on the timelines of the SNL. You know I'm not going to be able to give you any firm, information on dates that anything would happen and that sort of thing. We are all waiting to see that. But let me move on to the common currency question on the ECHO. And you know this is something that we have been trying to do over the last 20 years, right? On the understanding that it is important that countries meet the convergence criteria. And this has been the difficulty in the last, few years. I believe that the last communique, which came from Abuja, was the fact that the authorities had agreed that the countries that meet the convergence criteria by 2020 can begin if they want to. If you qualify, you want to, you can begin. That's the communication that came from Abuja. In practical terms, if two small countries, for example, meet that criteria, what would that common currency do? So there are very practical issues why that does not look feasible to me, right? So we hope that we'll need, if we see a critical mass of countries, and those countries that matter, those countries with significant weight in the GDPs, for example, if they meet the criteria and they are able to join, then you can see that you would have a viable common currency arrangement that has been put into place. So I think it's too early to draw any conclusions. Then the question about Eurobond buyback, that's also very statistical. Like we got a 2.6 billion out of the 3 billion or so, right? Yeah, so you're looking at 600 million that was used for the buyback. I think the most interesting question that I have had this afternoon is on my level of comfort about the budget. But I thought the tone of the monetary policy press release should give you a sense of my level of comfort. So you be the judge. Then the last question that I have here on the Bank of Ghana staff, right? Bank of Ghana staff and the financial sector. I do know that you should realize that it's been quite 2 years now since all of this happened, right? So some of our staff are on retirement. Some of the people who were in charge of the processes in the bank are on retirement. I've heard that some of them have been interviewed by the investigative bodies. So I really don't know the details of that. But internally, we have also, looked at the staff that have not retired, that are still here. They are going through the internal processes, trying to find out whether anybody, did anything wrongfully. I believe so far not much has come out of that process, but hopefully it will be concluded within the next few months, and then we would know whether any of our staff that are currently working in the bank played any role or, is culpable in all of that happened in the last 2 years. I mean, the last, period during which all of this went on. But I'm saying so because there are some things that happened in our banking system, such as promotional fees, facilitation fees, right? These are direct things that were done in the Ghanaian banking system, where people were soliciting fees from the public institutions that make deposits in these banks, right? So those are clear cases where if you are found culpable of having received some monetary incentive, it's very easy, right, to say that, okay, this person, received this inducement and therefore, you can really go after that person. And internally, so far, we haven't been able to find anything like that, occurring within the Bank of Ghana for the staff that are currently in the employment of the bank.
Brings us to the end of this press conference. Thank you very much, Governor. Thank you very much, friends from the media.